Right, looking at the market performance, while the JSE All-Share Index fortunately has been keeping its head above water. During lunchtime today, we were significantly firmer, well above the 58,000 point mark. However, just after 5, we're still in positive territory, just shy of 0.5% at 57,936 points. But the Rand... should we cough? Should we sneeze? Because this contagion effect is clearly having an impact on us. 14.30 is how we fare against the greenback, but we were weaker, especially early trade this morning following the decline in the Turkish lira. But to tell us more about this, we joined in studio by independent economist Ntomba Nambele, who'll also give us some insight into the market dynamics. Ntombi, great to have you. I guess some relief that the All-Share Index is in positive territory, but the Rand, what's going on there?
The Rand, it really is just feeling the hay fever of our emerging markets. Like you mentioned earlier on, because we are related to the Turkish lira and we find ourselves then, catching on to the fever as well. So it really is nothing that we have done, as you've mentioned earlier on. It's just the ripple effect and us being in tangent with the basket of emerging markets. Yeah. So you find that earlier on, we haven't been actually in the 14 Rand terrain since last year, November. So already it gives you an indication that, the Rand is not doing significantly well. But as you mentioned earlier, it's not only us. It really is just in the basket of other emerging markets. So that's where we find ourselves now. I think I'm quite pleased that we're at least getting back to the lower end of 14. In the morning, we started off... seeing ourselves against the greenback at 14 Rand 65, which was quite huge. And last week, we also found ourselves, in the terrains of like very late 13 Rands, which I was anticipating already that by the end or the beginning of this week, we'd already be finding ourselves at high 14. Yeah. So I'm glad that at least we're trying to, find for ourselves as well, to say that we won't just accept it as it comes. And, we will also just try and defend the volatility rather of the domestic currency.
Indeed. At least we'll get some perspective as well from Jameel in just a moment, who'll paint a broader picture to really get us to understand the Turkish economy. If we do take a look at some of the economic news that we anticipate to also be released this week, we got news of that ANC Sovereign Wealth Fund that they're looking to create following the Lekgotla. My question is, where are they going to get money to start the Sovereign Wealth Fund and what will its purpose be?
That's the big question. The question here is, okay, is it really necessary? Because they, in their argument, is saying that this is to, entice and safeguard the mineral as well as the energy resources of the country. That's all fair and well. But we already have imminent mineral and energy problems within the existing SOEs that are there. So how do we then, understanding that we're already at a deficit, unit debt to GDP is already sitting well over 50%. How do we fund this? We don't have enough revenue coming in. So for me, the big question is, how do we source the funding for this? Is this really necessary? For me is the question. Yeah. Could we perhaps be redirecting our attention into solving the imminent, SOE questions? Also, the big question that also was highlighted by the EFF spokesperson, he mentioned how he's not quite sure of the company's autonomy. Is it going to be an SOE? Is it going to be, co-privatized? Because that also influences its political influence. So it being aligned to the ANC as well is something that, puts us at ease because of just the history of our governance. It's not one that speaks to us having confidence in the strength of our SOEs. So it really is for me something that, worries me, and I think worries a lot of other people. Even though they are taking, example of what happened in Singapore. Sure. Singapore could afford it. They had a very positive current account deficit balance. We don't have that.
But even when we take a look at Singapore's story about how it actually came to greatness,
precisely,
literally from the bottom of the barrel, having faced economic challenges and then worked its way up through with some very strict reforms, though. I do want to pick your brain on some company results. We did have SAPI, and formerly known as the South African Paper and Pulp Producer, founded back in 1936. But goodness, seems as though they've been having a very tough time numbers-wise. We also see that being reflected in their share price, down by 9%. Despite that, though, some optimism regarding the market performance. You're still quite confident we can do the shareholder dance today, that the Aussie is in positive territory?
I think we will be happy that it is in positive territory, especially after last week. Last week was all grey. When we closed down last week, the JSE struggled to also just find its positioning and find its direction. So I think any good news, any green, I'm happy with that. I think it's just important to be able to just celebrate these little milestones that we find ourselves in, because then it speaks to us being an emerging market, being able to immerse ourselves in spite of the global sentiment that's happening. That's, the grey cloud that's covering all the emerging markets currently.
Exactly. Another point to build in, there's, again, we do see some industrial counters, Naspers, British American Tobacco and Anglo, in positive territory today, because a weaker rand actually works in their favor, because half of their operations come from international markets.
Correct. So it means that it's quite cheaper for them to be able to be in operation here, which is great for us. Just, leaning on to what was mentioned earlier about how we should also, as a country, be able to at least, beneficiate from having this weaker rand, and not only look at it in a way that's negative, because at least it means that we're able to compete in the global market more so because we are operating in that minerals space. So it's much cheaper for them to see that, this is an economy that we can buy in, because not only are their goods much more, cheaper in competition to what's going on in the global market, but also they, are at least being able to find their own feet in spite of what's going on in the global economy.
Indeed. Well, we mentioned the decline in the South African rand against the US dollar, and of course how that is a spin-off or ripple effect from the Turkish lira. Well, to give us some perspective, we joined on the line now by Jameel Ahmad, who is the Global Head of Currency Strategy and Market Research at FXTM. Jameel, great to have you with us, and to help build up on the points that have been highlighted by Ndombi here in studio. I read an interesting article, and the first line said, if you don't understand what's happening with the Turkish lira, as a South African, imagine Nenegate, and just that it didn't stop happening. The rand continued declining. Would this be a fitting description of the challenges we see with our emerging market cousin?
Thank you very much for having me. It's a pleasure for FXTM to contribute, and also thank you to the guests for the very good analysis. The South African rand certainly has woken up to the emerging risk from Turkey. However, they've been in the marketplace for a long time, and now global investors are really taking notice. What I could say about the Turkish lira is that it's certainly a currency crisis that could get worse before it gets better. I think that it could even get significantly weaker than the levels that the Turkish lira hit early on Sunday evening trade. It was
Jameel, let me jump in there, because that's quite scary. I understand the currency has actually declined at least by 50% in the last few months. So how low can it potentially go?
Nobody particularly can answer this question. That's because the fears from Turkey extend to so many different levels. You've got this ongoing political risk between the United States and Turkey, which is somewhat of a new risk that's developed over the past 2 weeks or so. However, the fundamentals in play is that there's big concerns over central bank independence, because President Erdogan is allegedly exerting more influence into central bank decisions in Turkey, which is a big worry for investors if any central bank, if independence is in question. And on top of this, you've got these concerns that currency weakness is going to really hurt the current account deficit. It will hurt any debt that in Turkey that's denominated either in euro or USD, which is reportedly up to 50%. And you also have inflationary pressures, which certainly would increase, which is going to impact the cost of living on everyday people's lives in Turkey. So there's a lot of different reasons to be negative on the currency. And because of these heavy concerns over central bank independence, there's not many to be positive that a lira can materially recover, which from what has been weakness of around 70 to 80% year to date, which is quite astonishing.
Lots of concerns that you have from the South African front, Jameel, and as such, Ntombana wants to add in and question your views on some critical issues.
Jameel, thank you so much for being with us. I just want to find out from you, I'm not really quite sure why there is right now quite a differentiation between the involvement of, the presidency from Turkey to its monetary policy. Should we really look at it in a way that is negative? Because I think, like you mentioned, this is a currency crisis that they're experiencing. Do you think not that perhaps there should be a collaboration between the, monetary policy of that country and their fiscal policy, just so that there at least is an alignment in, positioning themselves in a way that's going to be able to positively, move forward before, as I mentioned, it is going to get worse. But, how do we ensure that in their situation now, they're able to find a way in being able to manage that relationship successfully?
I would say absolutely not, because this is a political leader that's been so outspoken on monetary policy and economic matters in the past that it's really worrying investors. And it's concerning global investors now, to the point where you can see there's a crisis going on in the market. So President Erdogan, to provide some background info, is very negative and against high interest rates. However, Turkey needs higher interest rates to, one, offset the inflationary pressures. And if interest rates in Turkey were higher than they currently are, then this probably would have prevented what is the currency crisis that's now impacted South Africa. It's impacted emerging markets as a whole. Indian rupees hit an all-time low, and the Mexican peso, the Russian ruble, all of the emerging markets have been hit. And essentially, Turkey is dealing with such high inflationary and price pressures that are only going to get higher after the dramatic weakness over the past couple of days, that only high interest rates would encourage investors to move back into Turkey over the medium and longer term. And because Erdogan has been so outspokenly negative on high interest rates, there is a big concern that investors could stay away from Turkey for quite some time, which means that the markets like South Africa could be impacted by this as a knock-on effect, and it's a big concern for emerging market sentiment as a whole.
Well, we certainly look forward to getting more developments from Turkey, not too favorable with regard to the future outcomes, but a big thank you to both Jameel Ahmad, who's Global Head of Currency Strategy and Market Research at FXTM, and Ndomba Nambele, who's an independent economist here in South Africa.